What a week, eh, gang? I feel like I should be dragging on a cigarette while recording this one. What a pandemic week, huh? A new variant, rising cases, SNL was canceled, and fittingly, Tom Hanks was on hand for the occasion. How is Tom Hanks always the canary in the COVID coal mine? So it makes perfect sense that the LA housing market is still performing like a pandemic market. It sucks, but it makes sense. Let's look at the numbers. I'm Jon Schwartz, a house hacker, investor, and realtor in Los Angeles, California, and you're watching House Hack Los Angeles, a channel about winning in the Los Angeles real estate market. This is my bi-weekly market update for December 21st, 2021. This is my last market update of the year, so be sure to come back in 2 weeks for my 2022 market outlook. Each Sunday, I review the week's MLS activity for Los Angeles County to bring you the latest in what's happening in our market. These numbers come straight from the MLS, and you won't find these graphs anywhere else because I make them. If this is your first time watching the update, here's a quick explainer. Each graph covers the previous 12 weeks. The bars represent actual weekly numbers, and the line represents the 4-week trailing average. This smooths out the noise and helps us identify trends. Now, let's get into this week's data. In single-family listing activity, net new listings is less than a third of what it was 3 months ago. In the winter, we usually see a market contraction, fewer listings and fewer sales. But this is an unusually tight level of inventory, even for winter. Why? Well, 3 months ago, we saw 1,120 new listings and 386 sales. This week, we saw 573 new listings and 314 sales. So new listings are way down, but the sales numbers are keeping a pace. In other words, buyer demand is as strong as ever, despite our being in the off-season. This is reflected in the single-family sales metrics. Pricing is up from 3 months ago. Median days on market is a half day higher in the 4-week trailing average, but trending downward. And sale price to list price ratio is exactly where it was 3 months ago. As the pandemic drags on, so does this inventory-constrained, high-demand pandemic market. Condos, same story. Net new listings down to just 26 this week. Why? Well, 3 months ago, we saw 414 new listings and 164 sales. This week, we saw 187 new listings and 153 sales. Listings have fallen off a cliff as expected in the winter, while sales have continued steadily along. Condo sales metrics are a little more forgiving in that overall pricing is down from 3 months ago, though up from its low point in early November. However, the market is a day faster than it was 3 months ago, which is never the case in December, and sale price to list price ratio is exactly what it was 3 months ago. Multifamily, and remember we're talking about 2 to 4 unit buildings here, same story. Net new listings are down significantly, pricing is a little lower, though basically flat given the smaller sample size in multifamily, and median days on market is down and sale price to list price ratio is up. These are both indicators of a market that's heating up. In December? Very unusual. Looking at LA County vacancies as reported on apartments.com, we have another new low at 30,005 vacant apartments listed for rent. This time of year, though, there's plenty of available inventory that isn't being listed. In fact, I may retire this graph now that we're clearly past the vacancy bump that occurred mid and late 2020. As far as vacancy numbers are concerned, the LA rental market is basically back to normal. And speaking of retiring graphs, I'm thinking of changing up the format of this market update in 2022. If you wouldn't mind, and especially if you're a regular watcher, let me know in the comments what you like and dislike about these market updates. One last thought. Now more than ever, your starter home should be a duplex. Here's why. See you next week.